one of the sort of factors or components of the Canadian real estate market that maybe hasn't gotten that much attention generally is the use of home equity loans and lines of credit in all manner of real estate deal at this point. And so one of the things that we thought was interesting was just looking at sort of the stretched nature of HELOC usage and sort of its, I guess, negative cousin, which is the associated number of rising consumer insolvencies and bankruptcy filings. So on slide 83, this is a bit of a tricky one because this is actually a chart of U.S. Home equity cash out withdrawal. But the point we would make is that you can see what happened in the U.S. When the market really got pretty crazy there in 2004, 2005, 2006, and 2007 versus where it was previously, where it is today. Well, in Canada right now, the average per capita HELOC basis is $4,849. To put that in relative context versus the U.S. is at $1,080. So you're at a multiple of about 4.5x Canadian per capita HELOC debt relative to U.S. And if you look at this chart here on the left, with around $15 billion, if you put a 4.5 multiple on that, you're going to be up in the 65 to 75 range. And you can see how that compares to where the U.S. was at its sort of heady days of 2005, 2006. So again, it's sort of a classic thing. You would expect to see HELOC usage materialize and ramp up towards the twilight of the cycle. That's exactly what we're seeing now in Canada. And one of the problems that this, and this is nothing new, this has been going on for a while, but one of the problems that this is producing is a growing number of Canadians who are basically at their wits' end from a debt standpoint. So in slide 84, this is a snapshot of total consumer insolvencies year over year. This is a trailing 3-month basis, so the lines aren't too wavy and volatile. But the real number there to focus on is that green line in the middle, which is total consumer insolvencies. And you can see that in the last 2 years, that number has just been shooting higher. And the component that is really moving up are consumer proposals. So the Canadian bankruptcy system really allows for 2 different avenues. One is sort of formal bankruptcy, not unlike what we have here in the U.S. The other is the consumer proposal system. This is definitely preferable for a majority of Canadians because what it allows them to do is essentially a personal household restructuring where they work through the court system to facilitate an acceptable resolution with their creditors. So be it credit card debt, auto debt, they can sort of work out a resolution. And sort of incidentally, one of the things that is interesting about this is that we spent some time looking into the consumer proposal side of the insolvency equation. And I think one of the things that most people, or many people in sort of Canada don't realize, and I think will increasingly come to realize over the next few years, is that one of the sort of things that gets talked about a lot in Canadian real estate is that Canada is a recourse country from a mortgage standpoint, meaning that you can't simply walk away from your obligation. That debt will haunt you until the day you die. Well, that's not actually the case. If you go through a consumer proposal, which is again a restructuring, you can effectively convert a secured debt into an unsecured debt and therefore facilitate a restructuring. So we spent some time looking through this. It is absolutely the case. And we think that when the history books are sort of finally written on what ultimately comes to transpire in this sort of Canadian housing tome, this is going to be one of the chapters about how there was this sort of false perception about the non-dischargeability of Canadian mortgage debt.
Want more Hedgeye? Subscribe to Hedgeye Risk Manager, the holy grail of risk management investing tools. This deluxe suite of investing products includes ETF Pro, Investing Ideas, Market Edges, The Macro Show, Early Look, Risk Ranges, Real-Time Alerts, plus Macro Select and our quarterly investment outlook. Try Hedgeye Risk Manager today. now for the low price of $24.99 a year.